Hi, everyone, and welcome to Duckfund Talks, where smart capital meets action. I'm Anna Kogan, founder of Duckfund, earnest money deposit platform for commercial real estate acquisitions. And today we have a very special guest whose career bridges strategic leadership, finance, and operational excellence in the world of real estate investment and capital advisory. Andy Asher serves as CFO and COO, wearing two hats at Petra, a dynamic real estate investment and advisory firm that specializes in strategic acquisitions, capital raising, portfolio, and portfolio management. We'll dig deeper into Andy's journey today, and we want to learn about insights he has for everyone building a career in finance and operational leadership. Let's dive in. So we want to learn everything about your path from the very beginning, but let's start with today. If I'm writing your book, what is the title of the chapter you're in right now? And what was the one move that got you here?
I'd say today is the chapter being discipline over distraction. What got me here today where I am is trusting a founder with a vision that was underpinned in uncompromised integrity. Part of that is that we have to be disciplined and avoid shiny things, chasing the shiny, new, or exciting items that don't have that underlying stability and return and conservative foundation. They're distractions if they're just shiny items. So especially in this year, having that discipline of no being our no, or yes being our yes, having a good no-go checklist that we stick to, and even challenge ourselves, like deal origination members of our team being responsible for identifying what are the risks, being their own devil's advocate to make sure that we are responsible both with our projects and for the investors that partner with us.
That's great to hear because, it's very important to have, I would say, risk manager on the team, challenging the decisions and making sure that it's good that everybody is excited about something, but we always need to make sure that the risks are very well calculated.
There's a lot of things coming and going and being busy every day. There's a lot of distractions, not just shiny deals, but urgent things that really might not be the most important to try to focus on in the day. When I think about Duckfund and the work that you're doing, what kind of distractions do you face when you're trying to grow Duckfund?
That's a very interesting question. Actually, we have a lot of demand from our customers to provide services to find equity, debt, and additional adjacent services to commercial real estate acquisition. Sometimes it's very hard to say no because we need to focus on what we know how to do the best, which is EMD. And we really want to be helpful in any other directions, and we're trying to, but it's important to stick to your major goals. So I think that's the distraction which I'm facing right now, and I'm kind of thinking whether I need to pursue this path or not. We're talking a lot in the company about building a LPGP matching platform so that we kind of automate this process and it's helpful for our customers. We don't allocate a lot of resources, like human resources, to fulfill those requests.
Good.
My next question is tricky. So in commercial real estate investing, who are you? Tesla for innovation, Amazon for systems, IKEA for simplicity, or Starbucks for rapid growth?
I'd say we're kind of like IKEA with a Tesla battery pack. We want to keep things simple. We want to have repeatable systems like an Amazon, but simple systems that are easy to follow. Everybody understands what they are, and we can be consistent with us. And also with that brutal cost discipline on these projects, and then quietly innovating on the back end. We want our innovation to show up in the return, not necessarily some flashy headline.
That makes sense. And well, that's what is the entrepreneurial journey, right? You need to mix different strategies to make sure you are successful in what you're doing.
When I think about the innovation, and often it's technology, it doesn't have to be technology, but I've noticed Duckfund's layered in technology since we first started, since the first time that Petra did work with Duckfund. I'm curious, like, how did you do that, and who helped you? Is this done from the bootstraps of your own research, or did you have somebody you're able to, be a subject matter expert to get you there?
We have a team of developers, 6 folks behind the scenes who helped me to build the platform. And we're very much focused on new types of B2B marketing right now, where we use signals which we identify using AI to make sure that we reach out to folks when they need our service, not just, sending those cold emails to everybody. The development team was super helpful in this, but I was wearing multiple hats at a time where I needed to be a product manager of the whole platform, right? Because I talk to customers, I'm a customer facing person, and I need to make sure I know what the customer needs, what information we need to collect, and how to do that so that it's easy and it takes a couple of minutes to kind of, apply for the product and all that stuff. And it's also iterations. So our platform is version number 3 right now. 2 previous versions were like the MVP. And then with the usage and the feedback from the customers, I think right now we're in a much better shape in terms of technology we're using and the visuals of the platform and all that stuff.
When you add that technology, have you seen any difficulty in staying connected with the pulse of the clients? Right, you might have forms to simplify things, make things efficient, but I know when I've worked with people on your team, incredibly responsive, personable, and real engaged. How do you make sure you keep that?
Commercial real estate is the market of relationship. If you don't build the relationship with your customers and just give them the platform to work with, they will never come back. So we make sure that we have those calls with every customer who's registered on the platform, that we see each other at least through Zoom. It's very important. It's hard sometimes and we need to work extra hours for that, but that's what makes this platform, a platform with a human face.
It's worked out well so far for us working with you all.
Yeah, well, thank you very much. It's great to hear. What do you think is your sweet spot in commercial real estate? That might be an asset class, geography, or I don't know, size of the deal.
Commercial and multifamily, predominantly Midwest secondary markets. The newer deals are probably anywhere from 10 to 40 million equity checks, but they're especially for existing assets, they're items, they're projects where we can underwrite in 18 to 24 months, some kind of operational torque where we're having operational value add. So low dollar investment for the value add, but to really identify things that may not be managed as professionally as they should be, or the opportunity. So those items where it's not just financial engineering, but it's operational excellence. And it's saying no to the right things. We need to go back to that discipline, saying no that we're not spinning our wheels working on a project where investment partners just aren't interested in, or maybe a development project where the city or municipality that we work with aren't supportive or just makes it more challenging.
It's interesting about the investors, the LPs. What is the biggest lesson you learned from working with LPs or co-GPs? And now for new deals, when you were looking for partners, what is a no-go for you? What is a red flag immediately?
With new partners, I'll go back to for those LPs, I think that biggest, most important in working with them is that alignment with the LP isn't just providing them a slide deck. It's not just delivering this OM, but we want LPs that are challenging us as we try to challenge ourselves about the downside risks, and that details and availability are important before and after the closing. If you want a repeat investor, we have to have that providing the details and availability to them. So asset management and investor relations have to be a priority. And what I find when we engage with investment partners, what impresses them is the transparency of the underwriting, the details, and that downside risk. So it's more than just a narrative. It's something that's calculated with numbers so you can actually make a decision on facts and eliminate as much as possible the squishy aspects of looking at the range of outcomes with an investment. And so we have to have that communication with the investors, whether it's an LP or co-GP. We can't just be sending out OMs without personally engaging them, right? We have to make sure that we're listening to the investor. Our job is not just sourcing money, it's helping an investor. And that requires listening to them because it might not be the right fit for them, the right fit for their risk tolerance, their timing requirements or expectations. And the last thing we want is partnering somebody, bringing somebody on who early on is asking for things that aren't in line with our original underwriting. And so it goes back to saying no. Sometimes we have to say no to a partner that wants to put money into an investment if it's not the right investment for them. It doesn't really align with their expectations. And it may not be their expectations that they deliberately tell us, but it's those little red flags that tell us that they're wanting something different than what we think is executable in this project.
Yeah, that makes total sense. And it's actually a marriage. You need to be comfortable in this marriage. So, some pre-marriage activity and pre-marriage relationship should be established anyway. That's been very, very interesting. And can you give an advice for a new sponsor if somebody wants to enter the market and don't have much of experience? What is the best place to source equity? And what actually impresses the LP equity investor? What's important to kind of let them know? This is very important when you send in a cold email. This first line and the subject line, that's the most important thing. So what that first line should be in the relationship with the LP?
Yeah, I guess that first line, you want to be attractive, you want to catch people's attention, but it needs to be as factual and to the point as possible within that small segment so that they'll read it, say, is this aligned with what I'm looking for, and can move on or not. So for maybe new sponsors, there's, depending on the size, depending on where you are and the kind of projects you're doing, is matching that right. Are they local co-investors? Are these small check sizes starting out, and there's a lot more broad relational word of mouth having investors come in, maybe you're starting with some type of syndication, versus reaching out, getting to know even institutional partners. What is their buy box and what are they looking for? Constantly giving them opportunities, exposing them to what investments you may have, so you can learn that better and you can be respectful of their time and give them what they're looking for rather than adding them to a mailing list.
Actually curious, do you have a lot of experience with co-GPs or LPs mostly?
Yeah, we have some co-GP partners on some of our larger projects. It depends on maybe their partner that has an experience in a certain asset class or a geography that we may not. That's something that I've learned even in our looking for opportunities or pursuing an investment opportunity, is that we need to go have that discipline within a geography that if we don't have that in-house expertise, that we find that right partner that can help us with that.
Yeah, I talked to a lot of sponsors and I noticed that this co-GP dynamics before you go out there and syndicate LP equity, that's something that might be super valuable when you can combine the balance sheet or combine the expertise or the location or something else, right? Something that is missing, and that this co-GP partners, if they have that can bring a lot of success in equity raise.
And part of that, the important thing on that relationship is no different than within the organization itself. Say our company is the individuals, their roles, their responsibilities, and expectations being very clear, so that everybody's aligned on whose job is what is really the expectation here, and maybe aligning those roles, responsibility, expectations with what their comparative advantage is. It translates to having a GP partner is who's doing what, where is that expertise, where are we stepping in? We have to have alignment on decision making and what the strategy is, but on that execution, who's doing what, who's owning certain steps is just as important.
When I went to Stanford to get my MBA degree, the one lesson that I learned is that, especially if you're doing a deep tech thing, a deep tech startup, you need to make sure that your CTO is your partner and that you do it together. And it is much easier to raise venture capital if there are two of you, two co-founders, there are two folks who are kind of helping each other to navigate this entrepreneurial journey. And I think in commercial real estate, there is something similar to that, because especially if you're aiming at a bigger project, something that you have never done before, if you kind of go together with somebody, there is much higher probability that you're going to succeed in this.
I have a lot of personal experience. It's helped me to be good at a number of things, but I know that I'm not the best at everything. And having those partners that can fill in where I need that help just will make us all better.
Yeah, agree. Absolutely agree on that. I wonder, what is the most counterintuitive thing you believe about deals in 2026? Is there something that other sponsors probably don't see, some insights which you have about the market, or something you believe is going to grow into something big?
I think about counterintuitive. We're not going to chase the flashy. Plain vanilla and boring but sound is sometimes overlooked. And that is even key with some of the markets that we are looking at. When we're looking at secondary markets, we may even flirt with the periphery of that, things that certain institutional sourcing deals isn't looking at. And because there are challenges with that and have to have that rigor of that go, no-go decision making. But looking at those, I guess having the humility to say, this is maybe a more boring thing, but this one has a greater return, especially for its risk profile, than maybe a trophy asset in a primary city, primary market.
Is that something that you often find deals like this?
Yeah, and it goes back to sometimes that makes it more challenging with certain investment partners. It may just rule out certain markets. So we have to find those that are looking at deal specific and not ruling something out completely, as long as we're able to have the data in order to support why this investment might be better than other choices they have put their money in.
Speaking of the data, do you leverage a lot of AI in your day-to-day job to analyze the data?
Use more AI for making polishing deliverables for efficiency. There's some calculations for quick at least I know I personally use AI that we haven't expanded across our entire platform, but some of our development people are using AI to look at layouts much more efficiently and cheaply to understand what's possible. And what the feedback I've received from them is, it doesn't get you 100% there, but it gives you some order of magnitude and some good idea at such speed and low price point to be able to filter things out better on the early end. So improves the efficiency of that funnel.
Yeah, that makes sense. Well, we are experimenting a lot with AI here at Duckfund, and for now it's mostly marketing and some back office work as well when we deal with the volumes of documents, analyzing them using AI just to have the first glance. It's very, very convenient. But anyway, I do not believe that human intelligence will ever be replaced by AI, because the final decision still should be made by a human. Otherwise, AI is not going to pay for all those risks if they happen. It's been a serious conversation, and I want to ask a couple of, light questions. I wonder what's your favorite motivational movie is, and what is your favorite character there?
Okay, yeah. Motivational movie, I think about Tommy Boy. Are you familiar with that movie? Chris Farley, yeah. Tommy Boy, right? And it's because it's like a masterclass in grit disguised as stupidity. I mean, he's underestimated, he's unpolished, constantly messing up, but he refuses to quit. And he learns the product, he owns and learns from his mistakes, owns those mistakes, and figures out how to sell. And that's what matters, is having that grit and pursuit to keep going and to figure it out, because things aren't easy. So things that are really worth it in the end aren't easy and require that kind of grit. I also think that makes it look like, I mentioned earlier, having something that's attractive is important. Attractive things sell, but it doesn't mean that attractive things win. And that win is that long term. We need that resilience, that self-awareness, and ability to keep going to win. There's also this line in there where David Spade, Chris Farley's pigging out, and David Spade says, "I can actually hear you getting fatter." And that comment makes me think about the benefit of brutal feedback. I don't think within that storyline that's anything more than just a funny thing, but it is a brutal feedback, and it makes me think that we can learn from brutal feedback too. I mean, everybody ought to be not just open to challenge, but encouraging people to challenge, because I'll get better the more I'm challenged. And that needs to be not only things that are just kind little words of encouragement, but some of the best feedback I've received have been from nasty people that have said nasty things. And I've had those moments of being able to step back and like, okay, why is this person saying this? What does it say about me? What does it say about them, and how I can work with them? So having that kind of tolerance, and more than tolerance, that inviting of feedback, and even tolerance of the brutal feedback, and help you build thick skin, but can be something that's beneficial to tell us and help us to learn something about ourselves.
Yeah, I agree. Do you organize feedback sessions in Petra?
We have a review period, and we align those with certain KPIs that each individual has on a monthly, quarterly, annual basis. Those KPIs, it is that time scale. But the kind of feedback, we make it more than here's a process, but make sure it's really embedded in the culture, personality. That makes it harder. And sometimes to build the habits, you have to implement certain disciplines to build a habit. But it's asking people, what do you think? Hey, poke holes in this. When somebody talks to maybe a CFO or COO, they might not want to argue with them, and depends on the person's personality. But if you can actually pull it out of them, that's going to help yourself to get feedback, but it's also going to help them to build those critical thinking skills, that challenging, and that comfort to give others maybe hard feedback and being done the right way. I'm increasingly convinced that I have a responsibility to give people feedback even when it's hard. And it might not be comfortable, it might not be something they want to hear, it's certainly not something that I want to deliver to them because of how it makes them feel, or the disappointment or discouragement in a certain project it may give. But if it's something that's a long-term blessing for them, then I ought to, for them.
It's very hard to build this culture of feedback in the company where it's something that is not what people are used to. But when it's there, it's super helpful for everybody, and it actually ensures the growth of the company. If people cannot openly give you the feedback, but they have something in their mind which doesn't let them build good work relationship with you, it's very bad.
It requires constant encouragement. I mean, shifting your own personality and habits, extremely difficult. Doing that for an organization, I believe requires an even higher level of consistency and deliberate attempts to instill that.
Well, by the end of the day, it's all discipline, right? If you decided to do that, you need to do that on a monthly or quarterly basis, no matter what.
Yeah, I have to hack myself. I found over time, I love exploring new things. I love learning new things, but it doesn't necessarily mean that I'm extroverted. I probably lean more of kind of this introverted, love focus and smaller groups, but I love learning new things. That requires some interaction and getting out there. What that ends up looking like within the organization is that I have to set up certain processes or tracking that makes me do something. For example, even just outreach for individuals. It might not be my norm that while I'm driving, I'm constantly just dialing different people and talking to them, But if I make a list for myself and then I actually track that I've followed up with these people, I've initially called them, I've had these discussions, I gamify it, and I have a score. I score myself, and I can actually see that, oh, I've done it. I've done well. I've done what I've said I was going to do. And that's necessary for managing and tricking myself into doing something that's just not my norm.
Yeah, that makes total sense to me. The closing question is going to be, what's your biggest dream?
I want to help people. Part of why I came and joined Petra was because of what that founder was pursuing and the why that was under it in helping investors succeed in real estate and doing things for the right reasons. It isn't just, hey, not doing crooked items, but it's pursuing good for somebody else and trusting that you're going to be fairly rewarded. You're going to be fairly compensated. And if I'm successful in helping somebody else, I mean, that's my goal. That's what I'm going to feel happy about. I'm going to feel fulfilled if I've done success, but I've accomplished success, but only because I've helped somebody else be successful. So, some of those measurements we have corporately, some of the things I have personally with fitness, maybe it's trying new things, or it's helping my family with children, their own progression and goals that they have, and a spouse, things that she's interested in, things that she wants to accomplish. That how can I help? If I'm able to help somebody else be successful, I'm fulfilled, and I'm doing things the right way for the right reasons. So that maybe, that's not too much skirting around of the answer, but it's an underlying non-negotiable, because I find that any numbers that a target, if they don't have that underlying reason, they're not worth it long term.
I actually think that helping others, that's what makes us ourselves very successful. And that's the key component of success, helping others. I am completely on your side. Andy, thank you very much for joining us today. It was a great conversation, and I really appreciate you sharing not only the insights and your experience at work, but also a lot of personal stuff, which is much more, valuable in order to understand you better as a professional. I hope our service at Duckfund is something that is useful for you, and you're gonna happy to use it in the future as well. And thanks everybody for listening. We'll see you next time on Duckfund Talks. In the meantime, I wish you good deals and good luck.
Thank you.